The first thing is that in the West, the identity and access management practices have been going on a good 7 years. A lot of it started with some access control issues that some of the financial services institutions had, then later got built into the regulatory framework, got further enhanced with our Sarbanes-Oxley regulations, and then subsequently been further enhanced even further from an audit, or I should say clamped down from an audit perspective with the last failure of controls around this recent financial events and Bernie Madoff, some of the trading events that have come up to light. So it's been going on for quite some time, and many of these products that are now in the market have reached a level of maturity based on that level of work in that market. There's a couple of other things that are different. So we have in the West, we have this notion of capital is very cheap and people are expensive, and it's in the Asian marketplaces and certainly emerging markets it's actually somewhat reversed. So where in the West we would turn around and say once we start having to have 5, 10, 15 people on a problem, we start to look at automation. Here those numbers can be dramatically higher before you turn around and start looking at automation. So we always turn around and the common factor here is the complexity factor. So in the Asian marketplaces we're seeing if you're raising capital in the West, if you are trying to operate with Western level of controls and Western auditors, they will clearly encourage that level of behavior. And then there's an emergence of some regulatory actions that are starting to occur even here in the emerging markets that are starting to say, wait a minute, we need some controls. An example is the recent multi-factor or two-factor authentication that's been put into on the banking regulation here in the Indian marketplace. In general, when identity and access management controls aren't in place, you subject yourself to potentially risk and fraud. And that can end up in a few different ways. Probably the most significant control that we have, even in the West, would be brand reputational risk. Most of the financial services industry operates on a level of trust, right? There's regulation, but there's trust. When that trust is breached, it's very difficult to get that trust back. So there's a requirement in general from a business governance perspective to actually maintain that. And so access control mechanisms are a critical factor in that story. Fraud and theft is clearly one of the items that can occur. A lot of times they're in almost all the banking sector scenarios, West or East, the branch networks are very large. They're widespread. There's a lot of staff there. A lot of times that staff is not necessarily long-lived with your organization. As a result, we call that churn of staff. You're leaving identities where people had access to your platform banking systems in place for much longer than you would really want to, and it's just a significant control fraud risk issue. So those types of things also come play into this market as well. Whenever we implement solutions, and Sena Systems being an Oracle partner, we tend to implement Oracle's product set. We tend to implement things in what we call the whole solution. We look at this from an end-to-end perspective. Identity management systems do not live on their own. They're part of a larger IT infrastructure. And though you can actually stage gate how you implement them from, and put them into phases, and I often like to say we like to crawl, walk, and run when we implement these things, you definitely have to make sure they're well connected, both in technology perspectives as well as business process perspectives, as well as also in the training perspective on how to actually make sure that your control governance mechanism, as you implement them over time, increases and you decrease that risk on the, if you will, of unnecessary side effects or unintended side effects. It's a pretty important item. We tend to also try to make sure that their implementations are well implemented into the process life cycles of how IT systems are put into place. Oftentimes there's a whole control framework around when you take a system through its investment cycle of, when do I get the money to do this work, how do I do this work, through its QA and testing and into production, and then operationalizing that. So we try to make sure that we're well connected into those business processes as well. The reality here is you also have to get ahead of the story. You really don't want to have audit being the definer of your IT risk policy. You really want to have your own architecture around that IT risk policy, and you want to be able to set that framework to your auditors and say, here is what we are doing, these are the risks we're accepting, and these are the risks we're addressing. And by getting out in front of that story, you can actually be much more successful in managing the issues that come through an IT audit. It really comes down to a number of items. One, know your risks. Two, ensure that you have rational plans that are business risk justified around those risks. And three, be consistent with those implementations and make sure you hit those milestones. So oftentimes you can be cited for specific risks, but over time, your issue is how you address that citation and actually how you subsequently implement the solutions to address those. We actually try to make sure that the IT risk controls are built into part of the IT risk framework so that as applications are going through their stage gates of development all the way through their QA and testing, that the IT controls that are supposed to be there are in fact being built in. And by doing that and making it part of the whole solution, you actually can progress your IT controls as part of your normal progression of applications. Now, that said, we have another issue that we try to look at is a lot of times we found that some of the IT systems or IT security systems that were home built, and they were very good at the time they were built. But the threats keep changing, and the threats get more intense. And so what we try to look at is when is it time to do something in-house versus buying a product and let that vendor start doing that engineering. And we call this the difference between doing something core and something context. Something that's core to your business, you should be doing. Something contextual, you should probably be looking at others doing. And in this case, and certainly it's arguable that security is core and context in both ways. But there's sufficient enough security solutions in the marketplace that you probably shouldn't be writing them yourself. You don't have the testing facilities. You don't have the ability to actually turn around and ensure that those are kept up against every new risk that comes out in the marketplace. And the vendor community tends to have to do that because that solution is being leveraged by tens, if not thousands of companies. In this marketplace, we really are dealing with a couple of issues. First, I mentioned the difference between what the cost of capital is versus the cost of labor. So there's often a desire in this in the emerging market, or I should say emerging market and or Indian markets, to actually have people run that as opposed to implementing a system. That actually has a number of issues. It can get you through what I call the first few stages. But right after that, you get into some very complex data management issues, very complex process issues, and having a lot of people involved makes the process of coordinating all these moving parts to keep an accurately effective running system very, very difficult. And that crossing that transom of labor versus capital is very difficult in this marketplace. That's a big one. The second one is the audit and regulatory frameworks in this marketplace are not as strong unless, of course, you're aiming your business up against the West. And when you aim your business against the West and or you have Tier 1 auditors, once you're into that situation, it becomes much easier because the West expects these types of controls in place. The regulation, though, is becoming a little bit more stringent each time, and we do expect that the marketplace here will mature in the same way. In the meantime, we're also seeing the cost of the solutions coming down because of the advancements that are occurring in other markets.